I am Ethan Brooks, and what I am about to show you will change how you see crypto forever. Right now, at this very moment, $227 million is sitting in a ticking time bomb on the XRP derivatives market, and the people who place those bets are about to get destroyed. Here is what nobody in mainstream finance is telling you. While the charts look bearish, while the price looks weak, while retail investors are panic selling their XRP at $1.28, the data underneath the surface is telling a completely different story. A story that only the whales and institutional desks can see, until now. Stay with me until the very end of this video, because I am going to show you something at the end that will completely flip everything you think you know about XRP's next move. What is coming is not just a bounce. It could be one of the most violent short squeezes this market has seen in years. Let me show you exactly what is building beneath the surface. XRP is trading right now at $1.28. The price has been bleeding for weeks. May is closing down 6.19%, and on the surface, every technical signal looks like the bears are winning. The symmetrical triangle forming since February is pressing price down toward its lower trend line. The 50-day moving average is falling. The 200-day EMA is acting as hard resistance above. If you are a casual observer, you would think this is a coin in freefall, but here is where it gets interesting. Here is where the real story begins. Pull up the Binance USDT perpetuals liquidation map for the past 30 days. What you see there is not just data. It is a loaded weapon pointed directly at the short sellers. On one side of the book, cumulative long liquidation leverage sits at $24 million. On the other side, cumulative short liquidation leverage sits at $227 million. That is not a balanced market. That is a market where 90% of leveraged bets are positioned for a crash. And when 90% of a market bets the same direction, history tells us one thing: they are almost always wrong at exactly the wrong moment. This is what traders call a bear trap. And right now, XRP may be setting the most dangerous one of the entire year. Now let me explain exactly how a bear trap works, because understanding this mechanism is what separates investors who make life-changing gains from those who watch it happen from the sidelines. When short sellers pile into a market, they borrow the asset and sell it. They profit when the price falls. But every single one of those short positions has a price level where it gets forced to close. That level is called the liquidation point. Now imagine what happens when price reverses. Not gradually, not slowly, but suddenly. Every short position that gets caught starts buying to cover its loss. That buying pushes price higher. Higher prices trigger more liquidations. More liquidations create more forced buying, and the cascade becomes a rocket. That is the short squeeze. And with $227 million stacked on the short side right now, the fuel for that rocket is already loaded. The only question is, what pulls the trigger? Here is where the story gets deeper, because the shorts piling in right now are not the only force at play. There is a second signal hiding in the data that most people completely miss. May 2026 just recorded the highest XRP ETF inflows of the entire year. $118.29 million flowed into United States spot XRP ETFs in May alone. That is higher than April's $81 million. It is a complete reversal from March, when $31 million was flowing out. Think about what that means. Smart institutional money, pension funds, asset managers, they are not running away from XRP. They are buying it. While retail is panic selling at $1.28, institutions are quietly accumulating through regulated ETF wrappers. 7 spot XRP ETFs are now trading in the United States. Together they hold over $1.2 billion in assets. And Goldman Sachs, one of the most powerful financial institutions on earth, has already disclosed a $153 million XRP ETF position. Goldman Sachs in XRP, while retail is scared. Let that land for a moment. But wait, because even that is not the biggest force building behind XRP right now. There is a third catalyst that could turn this entire situation explosive, and most people are not paying attention to it at all. On May 14th, 2026, the United States Senate Banking Committee advanced the Clarity Act in a bipartisan vote of 15-9. This is the bill that would lock the SEC and CFTC's digital asset classification into federal law. This is the bill that would permanently remove the legal shadow that has haunted XRP since the original SEC lawsuit in 2020. The White House roadmap is clear. Senate floor vote in June. House passage targeted for July 4th. If this bill crosses the finish line, every institutional investor sitting on the sidelines, waiting for legal clarity, gets a green light to commit real capital to XRP. We are talking about a potential $4 to $8 billion in new ETF inflows. Based on Standard Chartered's own modeling, that is not speculation. That is institutional analysis from one of the world's most respected banking names. And here's the part that should stop you in your tracks. Right now, while the Clarity Act is marching toward a Senate floor vote, the bears have $227 million of short positions sitting directly in the path of that legislative grenade. If that bill passes in June, the squeeze does not just happen, it explodes. Now, I want to be completely transparent with you, because this is not just a bull story with no counterweight. The bears have real arguments, and you deserve to hear both sides. The symmetrical triangle on the XRP chart is a real pattern. It has been building since February. The default resolution of a symmetrical triangle that follows a major downtrend is a continuation of that downtrend. Price has tested the upper trend line multiple times since March and been rejected every single time. June is historically XRP's worst calendar month. The June median for XRP going back to 2014 sits at negative 8.49%. Only 3 Junes in over a decade have closed green. That seasonal weakness is structural, it is real, and it cuts directly against the bull case. The Clarity Act still needs a full Senate floor vote. It still needs to pass the House. Political timelines slip, amendments get added. Nothing is confirmed until it is signed into law. And the macro environment is hostile. United States 10-year Treasury yields at 4.91% and 30-year yields at 5.19%, the highest since 2007, are pulling capital out of risk assets globally. Non-yielding assets like XRP face real headwinds when institutional money can park safely in government bonds at those rates. So the bear case is not imaginary. It is real. It is data-backed. And anyone telling you this is a guaranteed move is not being honest with you. What is real is the tension. Two opposing forces. 227 million in shorts on one side. 118 million in May ETF inflows. Goldman Sachs accumulation. And a historic regulatory bill on the other side. Something has to give. And when it does, it will give fast. Now here's the piece of this puzzle that nobody is talking about. The detail that makes this entire setup even more extraordinary. On May 26, 2026, the XRP Ledger Foundation published a major new upgrade proposal. It is called AMM version 2. This upgrade would transform the XRPL decentralized exchange from a basic model into a fully advanced platform supporting concentrated liquidity pools and stable swap curves. The kind of infrastructure that makes XRP's network a serious competitor to Ethereum for digital asset conversion at institutional scale. And on May 27th, the SEC chair publicly endorsed digital asset conversion as a priority for modern financial settlement. The same day, the same week, the short book hit 227 million. The same month, ETF inflows hit their 2026 high. Coincidence? Maybe. Or maybe, the people who really understand what is being built here are positioning before the crowd figures it out. Tokenized real-world assets on the XRPL have already crossed $3 billion in total value. Ripple has closed deals with JP Morgan, MasterCard, and Ondo Finance on a tokenized treasury pilot built directly on the XRP ledger. The network that powers XRP is becoming core financial infrastructure for some of the largest institutions on the planet. And yet, the price is at $1.28, while 227 million in short leverage bets it goes lower. So what does this all mean for you, right now, heading into June? The critical price levels are clear. $1.26 to $1.30 is the floor that is held since May 23rd. If XRP loses that level and does not quickly recover, the bears win the short term. The triangle breaks down. The path opens toward $1.11, and in an extreme scenario, even lower. But if XRP holds that lower trend line, if the Clarity Act gets a Senate floor vote date confirmed, if ETF inflows continue at May's record pace, The short squeeze does not just knock on the door, it breaks it down. Reclaiming $1.40 means shorts start to feel real pain. Reclaiming $1.46 eliminates the majority of short positions entirely. And above $1.67, the entire bearish technical structure gets invalidated. $227 million of forced buying, chasing a price that keeps moving higher. That is what a short squeeze feels like from the outside. For the people caught on the wrong side, it feels like a fire that cannot be put out fast enough. The data is telling you something. The question is whether you are listening. Here is the bottom line. XRP enters June 2026 at $1.28. The chart looks bearish. The seasonality is against it. The macro environment is challenging. And yet, beneath the surface, institutional money is flowing in. The most important digital asset legislation in American history is weeks from a Senate floor vote. And $227 million of leveraged short positions are sitting on a trigger that one catalyst could detonate. This is not a story about hope. This is not hype. This is a story about math, about market mechanics, about what happens when the most crowded trade in the derivatives market meets a legislative catalyst it never planned for. The bears built a trap, but the data suggests they may have built it for themselves. Watch the $1.26 support level. Watch the Clarity Act Senate floor vote date announcement. Watch the weekly ETF inflow numbers from So Value. Those three signals will tell you everything you need to know before the rest of the market figures it out. If this video changed the way you see XRP, hit that subscribe button right now, because what is coming next makes everything I just told you look small. I am Ethan Brooks. Stay wise, stay positioned, and I will see you in the next one.